Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for the weekend of April 14th, 2017. It's Easter, Good Friday. Remember, the markets are not open in America on Good Friday in the commodity markets. Now, that doesn't mean in Europe and other areas they're not going to be trading, all right? Each part works differently. Give you an example. Most banks are open on Good Friday. So it's a little bit of everything, and I guess it's more of a travel holiday than a lot of people understand. But in any case, the stock market's continuing to sell off. So here we go with the market sort of reversing the Trump impact that we had yesterday when President Trump said late in the day the dollar's too strong, and boom. Well, the dollar's still down today, but if you take a look at how much you've given back from the overnight rally, for example, in the euro at 107.09.5, now you're at 106.45.5, you've given up 54 points. That's actually, what, 60? I said that wrong. 64 points. Most of the gain, as you can see. The British pound's given up its gain. A lot of the market's just giving things up. And as we're finishing out the trade today, we're seeing the stock market, instead of a strong end to the week, a weak one. And as we look at the monthly chart of the S&P, we can see how the market's been backing off here. Now, last week's low was 2317.75. You see that? This week's low still above it. So we haven't yet broken through that, and that's the only thing I'm noticing on the chart. When I'm looking to see where we're at, I still contend we're in a down thrust if you're just looking at what the market's done. It's gone from 2401 2317.75, got a small bounce, turning back down. And when I add the swing line to it, that's why I'm saying it's the down thrust. You clearly have lower highs and lower lows. Therefore, the weekly trend swing line is in a downtrend. I next look to see where is it in relation to the 18-day average of closes. Now, this is important. This market has been over that 18-day average since right here. November, mid-November. And remember what this big week was? That was the President Trump win. When the market got surprised, the market first fell, and then it came back. If we close under the 18-week average of closes, it'll be the first time since the election. Pretty important. As we come in on the Bollinger Bands, we're no longer challenging the upper bands. It's clear we're starting to challenge or positioned to challenge the 18-week moving average of closes, and very clear that the momentum is pointing down. Now, interestingly, this is a time frame where the stock indices on a seasonal basis try to go up. I'm not seeing that on this chart right here. What would negate my thinking that the market's going to hit the 18-day average of close or possibly close under it would be to get back over 2375, because then you would break this bearish pattern. Right now you have nothing. You have a market with momentum down. The bias is up because it's over the 18-week average of closes, but the swing line is down. When you come to the Dow, it's the same story. You've got the swing line with lower highs, lower lows. The market's in line to challenge again that 18-week moving average. Momentum is still pointing down, but bias up, swing line down. On the longer-term chart, it's still a market that's fighting for direction. In the NASDAQ, you're still very much in the uptrend until you get under these lows right through here. Now, momentum, I would be surprised if when the market reopens come Sunday night that we don't make a move where the slow stochastic gets at least to the 80, if not under that number. It's only 3.7 away. It's 83.77. And as you can see, week to week, it's moving about 3 points. So that's why I'm guessing that it'll be very close to that potential number. That was in the Dow. Let's go to the NASDAQ. I don't want to be on the wrong charts here. The NASDAQ turning down as well, so I'm looking for that at 83.75, maybe doing the same. This number would have to get over the 54.81 and a quarter area to say, nah, this is no more than a correction. I'm just doing fine. We'll see what happens. But the bias is up in all the stock indices so far. None are under that 18-week moving average of closes, but this little bad boy. And this one is the Russell. And the Russell is now knocking on the door of the lower Bollinger Band with momentum still pointing it down. It's in a downtrend. It's under the 18-week average. It's got a pattern of lower highs. This low's under that one. We had, for a short period here, a higher low. Now, if you look at last week's low, it was 1338.60. Now you're 1341.90. You need to take that out to convince the weekly charts that you're going to stay in a downtrend. In the VIX, you're up and over on a daily basis. This is a daily chart, 3 days in a row. This is a breakout. This whole area is now a base for this chart. And yes, you can get a move out of left field that says, oh, we're going to come down and take this out. Do it. Right now, the bulls have control of this market. And it's when you're 3 days in a row over, the question is it going to embed or just going to correct again? But the bulls control this market because the 18 is over the 100. You had a bullish crossover right here. And I'll show it to you. And you haven't really looked back since then. Then the question was, could it push out the upper Bollinger Band? It wasn't overbought when it hit it, so that was the positive. Then another day, now you're overbought, and that's fine. You got your 3 days up and over. The odds of staying over it are about 2% of the time now, if you believe, as I do, that 5 is the typical number max that it runs. So I've seen 7, but 5's what you typically look at. So yeah, it's ahead of itself, so you get a small correction. But when you get these things doing that, it's a big story when you have a long-term base. In the 10-year notes, the market, what is going on here in the sense of we keep hearing that we're going to get 2 interest rate hikes, maybe 3 this year, and the market, instead of breaking, we're getting lower and lower 10-year notes. Now, admittedly, I think there's a certain amount of the risk-off strategy here. What do I mean by that? I think the market's nervous about what's going on in North Korea. Very much nervous about that. There's going to be another nuclear test, I understand, before the end of this month. Okay, what does the U.S. do? How does it react to that? Second, we've got the election in France. So the first round, I think, is April 27th. And we'll find out how that goes. We expect that Ms. Le Pen will do very well, maybe lead that parade. People think she can't win the second round, which is the important one. But it's, well, first off, to get to the second round, the real important one's the first. You got to get to that next one. And they say she can't win. And I keep thinking Donald Trump couldn't win. Brexit wasn't going to happen. I don't know. We'll find out what's going to happen on that. And I think that's got gold and this market considering what's going on. The dollar took its clue from President Trump, got up to the 18-day week average of closes, ran into a brick wall and sold off when he said the dollar is too strong. And that all occurred yesterday. So you do have the period of lower highs, lower lows. You're in a downtrend. To reverse that and capture people, take out this week's high at 101.26.5. You'd have a surprise, and that would be what I'd call then a bear trap, and it wouldn't surprise me if you made a run for the upper Bollinger Band. That's what I think could happen if you get over that number. And what do I really think in the dollar? I think the bears are going to defend that zone. In the euro currency, the market has got a pattern of higher lows, higher highs. It is fighting at the 18-day average of closes. I don't know where the settlement's going to come in today. Right now it's under that, but that whole big rally it has sold off since the past, actually since yesterday, a very interesting move because it soared yesterday and it's given up most of those gains today. The British pound just tracking this 18-week moving average of closes in a very tight Bollinger Band. You've got to start really watching this because it's from here that trend trades develop. This is the setup you look for, and once it breaks out, you want to go with that particular setup. Even the Canadian dollar is getting that type of setup. Notice how narrow the market's trading in a band. Notice how it's all around that 18-week moving average, not moving one way or the other very much. A move's going to come out of that. These are the type of setups I look for. You don't have that type of move at all in the end. You've got a market that's got higher lows, higher highs. You can see it's up nicely for the week, and that is because when you're nervous, when you want to have what we call those safe haven trades, people run to the yen, and that's been getting a bid all week long. It is overbought on this chart, but I use slow stochastics on weekly charts more for momentum than anything else. Crude oil market. We're at an interesting juncture. There's so much contradictory news. You hear from the IEA that now world demand is going to fall, not go up for oil through the rest of 2017. We hear that OPEC wants to, via the Saudis, do another 6-month rate, let's call it a production cut. Russia has not met any of its obligations, and there's a lot of talk that it won't meet them and may not even join in for the extension. They were originally they had promised to cut 300,000 barrels a day. They're at about I've seen reports 130 to 180. So nowhere near the cut. That they have to do a lot more, and now they're discussing with their producers should they even consider going into a further cut. I don't think they're going to. But you're stuck here looking for a move one way or the other. 48 to 56 seems to be the trading range you're stuck in. And on nat gas, if you wanted to see a bullish development, take out this number, 32.3470. That would do the job. And that would give you then higher highs, higher lows over the 18-day average of closes. Now, I can't tell you where the market would finish, but that would be what you need. Right now, close back under that 18-day average, and the bears grab control. So we're at a key area here that I think will find resolution very shortly. I want to help you with your resolution because I have one. As you all know, I have a charting course, and used to sell this thing, by the way, at one point for nearly $500. Then I lowered the cost on another version I had to $200. Then I redid a whole version last year. Again, a whole new course. Did it a different way. No shipping, no handling. Everything's online for you. The charting software, $100 value. I throw that in. I throw in my research for 30 days, $60 value. So that's $160 by itself. At Christmas time, I had a special on the course for $69.95. I want you to listen to that price. Then I raised the price of the course to $89.95, but I offered a discount of $15. You're only $5 off that low price that I had on Christmas. Now I'm coming to the point where this coming week I'm going to get rid of the discounts and I'm going to raise the price again. So if you're interested at 70 with the discount, $74.95, 54 videos. Each about 8 minutes long. See what I do, you do the same for one thing. You're going to learn window envelopes, swing lines, Bollinger Bands, the importance of outside days. You're going to work with the slow stochastic study and other things that I throw in, all the little goodies that I can do. 54 chapters, you do what I do, and then in the mornings you join me, and I have a video that I create for you, and I go through 40 charts every morning, and I reinforce what you're learning on those videos. Then, about every 7-8 weeks, I throw a live webinar, and in that webinar, you're invited to join in, ask any questions, see what other people have to ask. One other thing, I make myself available to talk to you. So for all that value, $74.95, come on. The code is IRA15. Remember what I said. As I come back from Easter, I'm going to raise the price. Take advantage of it over the holiday. www.iraepstein.com. Go under the word education. You'll click purchase the course, but you'll see there's fact sheets. There's a video that explains how it all works, what's going on. You can click up here at any point as well. And if you see this icon, it means you're watching me on YouTube. Click that on. It'll take you to the same page with all that information. The best thing you can do is bet on yourself. And if you think about the price of this, it's $0.015 in the grain market of one of the grains. In the gold market, it's not even $1 an ounce. It's not even that much. Silver market, it's $0.015. Come on, we're not talking very much money here. Best bet you can do is a bet on you. I'm Ira Epstein. Have a great holiday. I will see you all come Monday.